Let's take a look at some quarterly retrospective as well as some look ahead for Q3. We'll start off with seasonality. If we're looking at my favorite thing in the world, it's data. If I'm on my deserted island, I'm not paying attention to news. I'm not paying attention to China banning everything crypto. I'm not paying attention to Turkey banning anything. I'm not paying attention to El Salvador, right? Like, I don't necessarily need to know about all that because the data tells you what you need to know. Removes any biases from the equation. So if we open my almanac here for Bitcoin price action since 2010, and basically anything since 2013 is kind of where most of the real data starts. Anything before that is prehistoric at this point in time. But since 2013, for the most part, Q2 and Q4 have been at least a 50% up move, whereas Q1 and Q3 have been basically zero. This is the worst Q2 we've had ever on record. This current closing Q2 that's ending in a couple days here. So how that will affect seasonality is probably substantial, because if we break this trend in some way, then we might see a highly positive Q3. I don't necessarily see that in the trend metrics right now for prices. I don't necessarily expect a positive Q3. I went back and watched the Q1 video, and what I said then was I expect early Q2 to be positive, and it was, but we flipped extremely quickly in May, allowing this thing to shoot into negative territory. And there's really so much that happened this quarter. There's the Colonial ransomware pipeline. There's Elon changing the narrative, people questioning the decentralization of the community, basically, if one guy can create such a shift in price action with a tweet. And what's coming in Q3 is the potential that Tesla has sold BTC and that fallout from that. Now, he said on Twitter, Elon, that they haven't sold, but we'll know when the quarterly report comes out what they have or haven't done. They're important because they're one of the biggest corporate treasuries of BTC holdings other than MSTR, other than Square, and Coinbase. Those are the key legacy players to watch as far as crypto treasuries are concerned. So I don't know what Q3 is going to be. You know, seasonality is kind of destroyed at this point. We may get back on track. Ideally, we see a basically flat Q3 with a highly positive Q4. But thus far, trend metrics for BTC and really everything support bearish continuation. ETH is a little bit different than BTC. It typically has its moves in Q1 and Q2, so the first half of the year, seasonality-wise, whereas its second half of the year is basically zero or negative. And this flies in the face of EIP-1559, which is coming soon-ish, depending on how things work out on the testnet. EIP-1559 changes the fee structure, enables a burning mechanic, allows the ETH Moon Boys to think that there is ultrasound money on the ETH chain. So I don't care what happens with it, honestly. As long as it's implemented, it works, and fees are more palatable when activity picks up on the chain. But as far as seasonality is concerned, it's also tough to expect mega bullish Q3, Q4 based on this alone. Again, if I'm on my deserted island, I'm thinking, okay, ETH's had its move for the year. Let's look at something else that looks better. ETH-BTC has never been positive in Q4. I'll say that again in Q3. But that's a strong trend that is undeniable. So it's never been positive in Q4. It's been on average negative in Q3. Something else you can look at for seasonality is the string of negatives and positives. You can look at averages, but in general, ETH-BTC hasn't had a great Q3. And this Q2 is really one of the most positive on record. Certainly the most positive since 2017, and DeFi mania is a big part of that. Fees a big part of that. Really, the interoperability for DeFi doesn't get enough credit because you can send anything to anywhere and instantly get hooked up and connected. It is stupid proof. There are so many people in crypto who know nothing about anything but are somehow connected to PancakeSwap, right? That's Binance chain, but the point is similar. And that this is what we've needed all along, is just to make it completely user-friendly. Something else that's sort of baked in here is COVID and Corona shifting everything, stimulus packages, all this stuff. gambling. People don't have anything else to do. I mean, we could go on and on and on trying to rationalize what happened and why stuff happened with things like Shiba Inu and all these other casino coins that were created out of nowhere and all the stuff that happened. In general, that's probably a negative for crypto because that doesn't exactly represent standing power. You know, casino, Ponzi scheme, pyramid scheme, MLM type stuff isn't what's going to last over time. So it's never a good sign for that. As a whole, this is the CME futures contract, which again, based on seasonality, these biannual contracts have either been up or down even since 2018, aside from March 2020, the Corona drop. This previous biannual that was here was the only one that sort of closed in a different way than it opened. So far, the expectation here is just lower lows until the end of September 24th. We'll see what that looks like at the end of Q3. But again, I don't expect much based on seasonality there. If we switch gears to hash rate for proof of work coins, again, if I listen to everything that anyone ever says coming out of China, including people who live there, including people who don't live there, you are super ultra confused as to what's going on. People are telling you miners are selling coins. People are telling you miners are fine. People are telling you miners are panicking, right? And ultimately, the data is going to tell you hash rate is down over 50%. It's down 66% from the highs. Clearly, something's going on here, right? Like clearly, China played an immense role in mining on the Bitcoin network with ASICs, with industrial, huge economies of scale that they're now coming to grips with from a regulatory perspective, whether or not they're going to just move elsewhere, whether or not they just close shop, do something else. I don't really know what most of them are doing on aggregate, other than a few moving to Texas, a few moving to Kazakhstan, a few moving just everywhere that isn't China, right? And the data, again, will tell you how quickly and fully can we recover from this. The other part of this equation is price. Bitcoin price, if it declines by 50%, hash rate is also going to take a massive hit because profitability declines. If profitability declines, then miners go into the negative territory on ROI, and some of them decide to shut off. BTC, as far as I can tell, was the biggest impacted from that. If we look at ETH, big spike down in ETH as well. Not as large as BTC, but certainly an impactful move down. Again, some of this is price, so you can't really look at this and say it's this or that. It's both. Clearly China's a major factor there. ETC down as well. Doge, wow, I haven't looked at this in a while, but that hash rate has just absolutely plummeted. The thing with some of these is if they are cloud mined or botnet mined and that botnet shuts off or that cloud mining shuts off, we get stuff like this where it's just a cliff, right? And sometimes that can recover in the next couple of days. But Q2 has not been kind to hash rate across the board for most of this stuff. LTC should follow this because it's also script. So yeah, it's the same. A plummet in hash rate. And BCH and BSV, these coins, as far as I'm concerned, are just dead from a proof of work perspective. I wouldn't be surprised if one of these actually shifts the proof of stake eventually. Probably not BSV because of Calvin error and the mining stuff there, but maybe BCH. I haven't heard a word from Roger Ver in months, maybe years. I don't know what he's up to, what he's doing. Wish him well, but I have no idea what he's up to on the BCH side of things. I think that's just a dead project. Zcash hash rate down significantly as well. Again, some of this is price, some of this is China. Definitely a little bit of both. Dash as well, down significantly. Monero is probably the only one that continues to post highs in hash rate. Some of this is because most of the network is CPU mined. So most of that is probably outside of China, if I had to guess. And a lot of this is probably botnet as well. I mean, that's something that you'd have to look into deeply to really understand. But it's, in my opinion, easier to botnet stuff with a CPU than a GPU, probably. So hash rates in general are down, and through Q3, if you start to get bullish, you want to see hash rates start to increase again. I already mentioned the London testnet, EIP-1559, a big deal. If you don't know what that is, if you don't know how it's going to impact things, and if you're curious, you can read more about it, on how that's going to change things and how it's already working on the testnet. I saw some value as far as what already burned on the testnet, and that's going to be just a perpetual thing people are going to watch on the main chain. Now, if fees just stay low or keep declining, then nobody will really care. I mean, there's going to be a burning mechanic regardless, but the whole reason EIP-1559 got so popular so quickly is because prices for gas was so high. We were raising the gas ceiling over and over and over again. Somebody needed to do something immediately, right? That wasn't necessarily layer 2 because that stuff's kind of still in the wings. This is a very immediate fix to the fee structure, which may at the end of the day not even change the exploding fees. It'll just introduce a burning mechanic. So ideally, really, make the fees as high as the market can tolerate, and then burn as much as that as you can. If you want to go max Moonboy stuff, right? Like if you want to actually take this into disinflationary territory, that's what you want to see. Burn as much coin as possible, right? And it'll be interesting to see what happens to gas prices, if anything, once EIP-1559 is implemented. You can see since August how gas prices have waxed and waned. This doesn't include USD prices, which obviously are massive. You know, this is a multiple of the GUI if you're multiplying USD times whatever. And the fees on ETH to ETH transactions are just sending ETH between wallets, generally quite low all of the time. But when you're talking about anything to do with DeFi, transfers within the DeFi smart contracts, swaps, that sort of thing, you're looking at layers and layers of transactions. If you've ever looked under the hood for any of these swaps, any of these DEX aggregators, that sort of thing, you'll just see like 8 to 10 things that are going on in the background that all start to add up, right? And that's how these swaps get so expensive. And if everybody's doing it, gas just gets more and more expensive. So definitely watch that if EIP-1559 gets implemented in Q3. Something else we can look at is on-chain metrics for these tokens, including BTC, which isn't, to call it a token is blasphemy. It is a currency. But if we look at active addresses declining, transaction counts declining, a lot of this is mining related. Keep that in mind as well. Across the board, anything that's proof of work and mining related, you have to take that with a grain of salt. ETH has actually recovered quite well over the past couple days after being down. If we look at April started around 500,000 to 600,000 active addresses and reached for 1.8 million. And now it's already back up to, oh, sorry, that's transactions. It's already back up to 800,000 active addresses. Transactions reached for 1.8 million. Transactions already back up to 1.4 million, when briefly down to 1 million. So on-chain wise, it looks like ETH is back on track as far as a bullish reversal potential. And ultimately, you don't want to see gas low. That's a dirty little secret. You want to see activity. This is a proof of activity. If gas is basically less than 10, GUI, whatever you want to think of this as, that just says no one's using the chain, you know. We know what happens when people are using the chain. Gas is 50 plus, gas is 100 plus. We know what happens when we get liquidation spikes because we get these huge spikes in gas. So hopefully EIP-1559 can alleviate some of that stuff. But you can see where gas has trended even since Saturday. So if this starts uptrending, it's certainly more bullish than bearish for price. And it looks like on-chain activity has started to pick up there, so that's good for ETH. Link, I'm just going down the list as far as market caps. Link's on-chain activity continues to decline, so it's hard to stay bullish on stuff like this. You want to see on-chain activity increasing. BNB, I don't know what this spike is about recently on transaction counts, but again, active addresses way down for the token, not necessarily like PancakeSwap or anything. Active addresses way down, transaction counts are way down. That's not what you see when we're bullish. You want to see that reverse in Q3. ADA as well, massively down from highs in May. I mean, this is just not great, right? Like this looks like the Bitcoin hash rate chart. You know, it's gone from 140,000 active addresses to under 60,000 very quickly. So it looks like a lot of people got sour on ADA very quickly. Doge has the typical botnet, not human activity related active addresses and transaction counts. I mean, this is not normal to see stuff like this on a chain. I don't know if this is Robinhood related. I don't know. Yeah, I don't know what this is, but none of this makes any sense. I don't know if this is people transacting based on Elon Musk tweets, but even on average, all of this stuff has declined to multi-year lows. So if you're bullish Doge, you want to see this stuff peak up again or start to peak up. You kind of have to really zoom out to get a picture as far as what's going on here. But to see transaction counts drop from 50,000 on-chain to 30,000 or less than that, I mean, that's basically retracing all of January, yet price is still at a quarter. So there's a big bearish divergence there between on-chain activity and price, and active addresses equally as brutal for Doge, down to 77,000 from 120,000. The other big headline this quarter will continue to be a headline is stablecoins, which are just printing nonstop. I think eventually USDC does flip Tether as the leader in total supply. I don't know how long it'll take. I don't know if that'll happen because of regulatory reasons. I don't know if Tether's going to get fudded into oblivion, but it looks like we're headed that way with the stablecoin lending that we're seeing. We're seeing a ton of push for Coinbase, BlockFi, everywhere to sort of compete with DeFi for these APYs. We just saw Coinbase announce, I think it was 4% today, APY. This is BlockFi at 8.6% currently, offering for USDC, GUSD, PAX, PAXG, Tether at 9.3%. These are basically a 5 to 10x multiple of what you're getting in legacy, if not greater. And the longer this stays up here, the more stablecoins you're going to see printed. And this doesn't necessarily represent euphoria for buying stuff on spot exchanges, which it may historically have represented. This represents people looking for yield wherever they can get it in the legacy world. And when they start to trust platforms like BlockFi more and more, or Coinbase, which is just more and more connected with institutions globally, you're going to see very likely a continued explosion in stablecoins, and until these rates start to come down. If these rates keep going up, you're going to see printing like you've never seen before on stablecoins. So I'd watch for that throughout Q3. Something else I like to watch for on high time frames is exchange reserves. BTC exchange reserves have been increasing in May and have since sort of flattened out. If throughout Q3 we start to see actions like we did in 2020, where we see stuff coming out of exchanges, that's certainly more and more bullish. We may never see that again. I don't know. But I would definitely watch for stuff like this. ETH the same way. It sort of flattened out at those highs. Typically what you see at all-time highs is you see people depositing coin to sell, sort of instinctually. And if there's a divergence here between reserves declining and price flatlined, or still also declining, then you can say, all right, there's a bullish divergence. There's less for sale, but price keeps going down. That doesn't make sense. So I'd watch for that throughout Q3. It's been basically flat for ETH for Q2. Something else to watch that's hard to even measure, I think, if you look at this on 3 different websites, you're going to get 3 different answers, is mining outflows across the board. I can't even get those metrics for ETH, at least reliably. But again, if miners are panicking legitimately, and they're like, all right, I need to sell everything I own, we're going to see upticks in reserves for BTC. We're going to see upticks in miner outflows and miner wallets. We're not really seeing that, arguably. I'm not convinced that that's happening across the board. There's still a strong ETF narrative as well globally for really all of crypto. BTC, ETH. BTC, at least in the United States specifically, has had probably 50 applications or more, most of which are still pending, most of which continue to get denied. And as long as we have this colonial, ransomware type stuff, it's probably a hard ask to get to get a ATF. That's just my own speculation. These are the Grayscale holdings. And something else to watch for through Q3 is the discounts on specifically BTC and ETH. If these discounts grow, if these unlocks continue, you're probably going to see a bearish price action for BTC and ETH. If these enter a premium, as ETH is entering today, that represents more bullish sentiment in general for these products from an institutional perspective. But ETH also has unlocks coming on ETH. So I'd watch for that. Grayscale also has announced, 15 to 20 more coins potentially coming in the future for their pink sheet style type vehicle platform, whatever you want to call it. They have a ton of junk already, but they're wanting to add much more junk. Maybe the biggest ETF news that's come out very recently is ARK Invest, Cathie Wood's group has announced a an application for a Bitcoin ETF. Obviously, it's the first step. And ultimately, they probably don't, the SEC, they don't approve a single ETF. They're probably going to approve a bunch of them at once if they do. That way they're not saying like this one is the best. And it won't bring everybody piling into one ETF at once. But this is certainly something to watch for. Probably not seeing an answer on this in Q3, but important to look out for the continued news surrounding that sort of thing. That's the gold standard for institutional investment, some sort of ETF. I talked about this in the beginning, but China has banned everything crypto, or at least actually legitimately this time. Huobi winding down, OKEx winding down, Bybit winding down. They're going after Binance now as well. You're seeing this shift of OI to Bitfinex from sort of the East, as it's kind of one of the platforms that's probably available to non-US users in a big way. And we saw open interest, this is across all platforms and futures, reach a mega peak mid-April and then just get continually slashed as you get bigger and bigger long liquidations in this case on the way down. So into Q3, if we start to get bullish again, I would watch OI across the board. It may represent the China stuff recalibrating, allowing funds to get shifted in places that trading can actually occur, allow people to get onboarded. This may take more than a quarter. I don't know. Maybe in a bear trend, we actually just are declining anyway. That's the tough part about this chicken and the egg thing. Is this all China, or is it both price and China? Clearly they're inexorably linked. So it's tough to say whether it's one or the other. But the open interest will help clue you in. How excited are people to be long BTC? We can look at ETH open interest as well, which looks a lot like price, right? I think you'll see spikes, crazy open interest spikes for some of this stuff. That's also been declining, and that's across the board. I don't think there's an open interest for Tether. But anyway, I would watch open interest. If you get bullish or bearish throughout the quarter in one way or another, start to look at all this stuff collectively. Has hash rate improved? Has on-chain metrics improved? Is open interest improving? What does the China sentiment look like? Are people more bullish on the China recalibration, people-wise, manufacturing-wise, trading-wise? This is all relative to crypto, of course. And that's going to affect things like TVL as well. If China is out of the DeFi game, you're going to see chunks of this come off. It's going to be hard to go after DeFi directly from a Chinese perspective if it's not blocked by the Great Firewall. But I'm sure they have ways of incentivizing people not to use this stuff. So I would watch TVL relative to price across the next quarter, the next 3 months, because obviously if price declines by 50%, you're going to see a massive hit in TVL because all that has baked in price volatility, liquidation engine, that sort of thing, as long as it's not stablecoin related. And if we're ultra bearish, I'd expect the stablecoin TVLs to increase dramatically, whereas the other TVLs are going to just continue to decline, right? And we saw that a little bit with Curve. Curve peaked up and is still kind of the leader in TVL on ETH. And another thing to watch is what competitors besides Binance Smart Chain and PancakeSwap are going to start to emerge. Avalanche, Solana, they list a few here. Polygon, Thorchain, all this stuff. Does it have staying power? Is this all just a flash in the pan based on the bull run since January? There's a ton of Solana stuff floating around. Investments, FTX, CMS, the list goes on and on, venture capital, Sino Capital, 3AC, right? They're the who's who of who's bullish on anything trying to get you to buy their bags, right, is in Solana. So will that work out for them in the near term, in the next quarter? Definitely something to watch for. If ETH is successful in EIP-1559, if it's successful in implementing layer 2, then these other chains have less of a chance. These other chains are sort of there if ETH stumbles, in my view. I'll just wrap it up with some TA-related things that I usually don't talk about on the quarterly reviews, but we are seeing, and we did see, a big trend shift. This is the cloud in the fill here, and then the lines are the 50 and the 200 cross. A lot of people were comparing this run up to 2016 and 2017. What we didn't see in 2016 and 2017 was a decline in prices to the point where we saw a death cross in the 50 and the 200 and prices below the cloud. This is market cap, this isn't prices, so it's a little different, but market cap still across the board above 1.4 trillion. We briefly got up to 2.4 trillion. So the big thing to watch for me in Q3 is how do we respond to trend metrics flipping bearish? Do we stay bearish and get more bearish, or do we actually attempt a bullish reversal in Q3? And you'll know, I always say this, but price isn't going to move without you. The trend metrics are going to tell you where we're going. If we're above the cloud again, if we're above the 200, if we have a bull cross, right, we're bullish. It's that simple. We crisscrossed here for Corona, and that may happen again. But right now it's definitely leaning bear. The DeFi perp is another one I watch religiously for DeFi because it's kind of told you, at least early, it tipped you off in pre-2021. There were inverted head and shoulders everywhere on everything, basically. This isn't to say you're always to expect this massive run. It's to say we're probably bottoming here. You get this run, we establish this range, we attempt for higher highs, get sold off swiftly, mega algo on-chain liquidation type stuff. And we just continue to bleed, and now we're into this death cross situation. So the question for me, trading this, how bearish are we going to be, right? Are these governance tokens going to be worthless? Is emission going to take over for everything? And this thing is just going to keep bleeding to January levels, which we've seen for some of these coins? Or are we going to see the second coming of DeFi this year from institutional demand or thereabouts? I don't know. I don't know what brings us here because China's gone. We have regulatory risk from the UK, from the US, from China, right? Like it's not ending. The upside on eyeballs on us from a regulatory perspective is massive, especially what's going on with Binance and what happened with Binance as far as the pancake swap stuff and the rug pulls and, the list goes on and on and on. But for me, the TA is going to tell me how bearish are we regardless of news. And I'll round it out with dominance, which in a bull market for altcoins, we're pushing lows, right, for dominance. If dominance is below the 200-day moving average historically, that is a bull market for alts, hence altcoin season. If it's in the red fill here, previously we had this broadening wedge into a head and shoulders that just puked hard out of the bottom, right? We had a death cross on dominance with the head and shoulders. And in March, April, May, a lot of the non-ETH stuff, a lot of the non-DeFi stuff, Doge specifically, took off, right? A return to sanity, not just from a BTC Maxi perspective, but from a market perspective. A return to sanity is Bitcoin gaining over alts, Bitcoin being back above this 200-day moving average. So that's something else I'd watch for into Q3. Lastly, I'll just mention the ETH-BTC and DeFi portfolios that I trade for Techemy Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see AUM, allocation, trades, performance, all that stuff. You can see how bullish or bearish I am going into Q3. You can see where everything sits. You can see people going in and out of the smart contract. So everything is there. And in general, my analysis matches matches my allocations here. I added to some ETH and BTC positions in a very, very small minor way last night and bought a few DeFi coins last night as well. But it's hard to stay mega bullish going into Q3, seeing how everything looks with trend metrics and all the other reasons I talked about in this video, on-chain metrics, regulatory risk, a geo shift in everything. It's like the game board. China got pissed, flipped the game board table, and everybody's still picking up the pieces trying to figure out, did you own the railroads or did they? Who owned Park Place? Did anybody? Right? We're still trying to figure that out. So that may take all of Q3, and then we'll see what Q4 brings. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.